Ofgem has confirmed the latest energy price cap for April to June this year is increasing by 6.4%, so households are being encouraged to lock in their prices before they go up again. My name is Robin Moore and welcome to this week's episode of Tax Tidbits, where the new price cap will see the average energy bill increasing by £111 per year to £1,849 because, life wasn't expensive enough already. Ofgem has said that rising wholesale costs and inflation were behind this hike, which is the third consecutive increase to the quarterly cap and higher than the 5% that analysts had forecast. While fixing your tariff may save you from some future surprises, some experts think that prices could drop in July, though predicting energy costs is basically fortune-telling at this point. So take some time to check your options and compare energy deals. And if your bill still gives you heart palpitations, make sure to contact your supplier. They are obligated to offer you support. Speaking about energy, BP has confirmed that they are hitting the brakes on its investment in renewable energy and doubling down on oil and gas production. They are slashing over £5 billion from renewable projects and ploughing £10 billion a year into fossil fuels in a bid to increase profits and boost shareholder returns. BP's new goal is to pump out between 2.3 and 2.5 million barrels of oil per day by 2030. While the company is still aiming for a net zero future, it's clear they're more invested in the cash for now. It's possible that this increased production could lead to a drop in global oil prices, but it's unclear how this shift will directly affect us at this moment. The UK government reported a surplus of £15.4 billion in January, meaning the money received in taxes was higher than government spending by this amount. This sounds great, however, it was significantly lower than the £20.5 billion they were hoping for, and now Chancellor Rachel Reeves is feeling the heat. With the economy growing slower than expected and borrowing costs higher, there is speculation that she will either slash public spending or raise taxes. And seeing as she's already ruled out additional borrowing or tax hikes, it looks like spending cuts could be on the cards. On top of all this, government borrowing is way higher than forecast, and consumer confidence is about as strong as a wet paper towel. We can expect to receive an update on the UK economy outlook from the Office for Budget Responsibility on the 26th of March. We will cover it on Tax Tidbits, so stay tuned. Tesla's shares took a 9% nosedive after European and UK sales dropped by almost half in January. While the European electric car market grew overall, Tesla seemed to hit a speed bump. The main culprit seems to be fierce competition, especially from BYD, a Chinese car maker that offers features that Tesla charges extra for as standard. But some analysts say that Elon Musk's controversial political stances might be making some potential buyers hit the brakes. The launch of Companies House's new agent filing system has been delayed just a day before it was set to go live. Talk about last-minute panic. It was supposed to go live on the 25th of February, but it's now postponed for final testing after they found the system still required some fine-tuning. This service is part of a wider plan to make anyone setting up, running, or controlling a company in the UK verify their identity. Despite this delay, the registration date for individuals remains unaffected, so you should still be able to verify your identity from March 25th. Thanks for tuning in to this week's episode of Tax Tidbits. Make sure to subscribe so you don't miss any of our updates. Catch you in the next one.